Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The market overnight snapped a two-day negative pattern and recaptures its momentum as it now stages a rise just above the 60-day moving average. All eyes look towards the level of 67.15 as a close of New York above this level would see further gains and retest the top side of its range around 67.70 to about 68 cents, but is not likely to recover beyond there, due to the fact that the MACD is flat and also the RSI is mixed as it flirts around with the 50-day moving average. Looking ahead, we get the RBA's May rate hike. After a surprise in many market participants earlier this month from the rate hike, today's minutes could give some insight into what the central bank is thinking. Also this week we get the wage price index on Wednesday and then the employment change on Thursday, while in overseas we also get the US retail sales, while also eyeing US Federal Reserve Chairman Jerome Powell's speech titled Perspectives on Monetary Policy. If we do see a close that is beneath 66.65, then I feel that further weakness should continue and look towards that key support or the bullish foundation seen around 65.1995. Unlike the Australian dollar, the euro still appears to be struggling to recapture any momentum, as the market, since breaking beneath the 109, is still lacklustering around that level, and therefore from beneath 109 could see further risk down towards 108.35, and since the break could even reach the area of 107. The technicals are heavy, and with an ADX trending to a bear case does support the overall view. Even though the dollar index did reach its objective of 102.50.60, has slipped into a slight consolidation pattern as it eases back to 102.25 this morning. The dollar yen, the market is still maintaining a slightly bullish stance after recapturing 136. Now looks on towards 136.60 and maybe even to where the failed topside contest, which was a key level at 37.80.90. I do feel that from the potential of the technicals that we may see a break even beyond there, but that's a broader case. That would be around 140. But for now, the market bulls are still holding since Friday's rally. Let's see if we can get to that topside objective around 138. Sterling recaptures its momentum and also the 125 handle. However, the market is still a little bit mixed in due to the fact that the MACD is negative and the RSI is flirting with the midway point. So little confirmation to this current candle. So keeping an eye on the current trading range of 124.70 to 125.45 today. Let's see if the market does give back some of its gains and maybe even head back towards the bottom side here of 123.80. Having staged a decline of 3 days bearishness, the market is attempting to recover, but from the technical aspect, I still feel is bearish. We are under the midway point to the RSI, supporting the bear case, and the MACD for the last 4 days has supported a bear case. So since the topside rejection from that key level, which was seen around 2068 after 3 challenges, the market is poised for another down test today, and I'm looking towards the region of 2008 and maybe even towards the region that comes in around 1,994 to 96 and reassess from there. As a break there would give further scope down towards the region of 1,974 to 78. And wrapping up with oil, the market rebounded off the 69.5 level, but still lacking momentum due to the fact that the RSI is underneath or around the midway point and negative, and also the MACD is too. So we could see the gains back towards the current target, which is around 69.5, or even down to $66 to $67 a barrel. Unless we get a close above 72.5, the bears should continue to weigh on the market. Well, that's a wrap for the day. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great day ahead.